Oh, thanks, bud. All right, good morning, everyone. Brody, our viewers asked you to quiet down there, Brody. All right, good morning, everyone. Sorry about the slightly late start. Let's kick it off. All right. Um, Yesterday's action in the States was finally a little bit different from what we'd been seeing. We saw a bit significant sell-off on the day, really intensifying toward the end of the session. You can see it just continued to get steeper and steeper into the close. The only thing that was spared a down day as a sector was healthcare, which obviously is a defensive, so not a huge surprise there. I think I don't know if that's part of the driver, and I don't really suspect that it is. But we had President Obama speaking yesterday, kind of heightened some jargon on Russia and the sanctions and condemning their actions there. So I don't think that that's what caused the sell-off at all. But something else that continues to go on and continues to potentially build some steam. The sell-off happened despite essentially better than expected durable goods orders and good PMI numbers. So in Asia, we didn't really have any significant moves in Asia. In fact, we had the Nikkei that reversed positively at the end of the day. It's actually up 1% as of right now. We had some concerns out of China again amongst some liquidity and people worried about the increase in repo rates there. But China also managed to kind of creep its way back into positive territory. We were down close to 1% only about 2 hours ago. So we continue to kind of see the worries building in China, and I personally think a little, what we're seeing right now, what we saw at the end of the day session yesterday, and the failure in a lot of the mining stocks yesterday at the end of the day is exactly what we had talked about a couple of days ago. That every day, the market started to bet that China is going to do stimulus 2 or 3 sessions ago after those shocking PMI manufacturing numbers. Every day that goes by that China doesn't come out and doesn't do some sort of stimulus, doesn't make some sort of adjustments to their fiscal plans going forward, I think is a day that the market gets a little bit more and more nervous that they're not going to do everything, and you can potentially start to see more and more pressure being put on the market to try to force their hand. There's no real corporate action here to report on the day. There's a lot of market data out today. Nothing huge. We've got consumer confidence and business confidence in France and Italy. We've got M3 money supply numbers in the Eurozone. We've also got retail sales in the UK. We've got PPI here locally. We've got GDP in the States. We've got personal consumption, initial jobless claims, and GDP, obviously the big ones in the States. And then the one thing that I think is really going to be significant focus today is going to be the local SARB interest rate announcement, which, remember last time they gave us quite a big surprise. It's been incredible how the interest rate sensitive stocks have rallied into this meeting. They seem incredibly confident that she's not going to do anything. And it's maybe simply because the rand has returned to some sort of stability that the market's betting that she's not going to do anything. But they've definitely priced in the expectation that she's not going to hike rates. So we'll have to see how that plays out for the rest of the day. All right, let's get into the maps real quick. First thing that we're going to look at, or I wanted to show, is Naspers. If you guys haven't seen already, obviously Tencent was hammered overnight in Hong Kong. A little bit of a bounce here toward the end. I think it was down about 7.5%, now down maybe 5.5% at last glance. But bottom line is we talked about this range, I think 2 days ago. We talked about the 1230 to 1150 range and how consistent and significant I think that was going to be, and as soon as we break out of that, we were probably going to see an 80 rand move on either side. Well, this morning, without question, we will open below 1150, I think, and so dropping below 1150, that really puts a target price of about 1080 on Naspers. So let's just have a look here, slightly longer term, and let's try to find where we might start to look for some sort of support at that level. Definitely at 1100 here, I think what we talked about before. Maybe even slightly, it's just above 1100. There's definitely some sort of support. I think that'll be first line to be tested this morning. If that drops, then I think we're really going to be looking right around here, which is we made a nice breakout there. We pulled back and we tested it beautifully. That's about around 1038. Somewhere along those lines. That might be a little bit much, but somewhere between there, I think I would kind of expect us to settle in. Like I said, the target on the breakdown here is about 1080, but if it gets overdone, it might come down and test this level here around 1036, 1038. If we find some support, we may manage to close around 1100 or slightly above, which could potentially be a decent place to nibble. Obviously, Tencent probably getting hit significantly on the back of all the other, hot social media, IT stocks have been hammered. Facebook's was hit hard yesterday, probably more on the acquisition than anything. But if you look at all the hot stocks, if you look at the Teslas, the Netflixes, the Googles, all of the really hot stocks of late have really been on the offer in the U.S. session. And to me, that's the most worrying sign of anything, is that all the market leaders are starting to lead to the downside. And I think that's incredibly significant. All right, next one is Sasol. Sasol, you can see there, we broke out obviously above the 586 level. What's really cool to me about this chart is simply the pattern consistency here. So if you look here, when we broke out above 520, we made this push higher. We came back and retested the level at 520. Then we broke up, sort of short-term double, topped it at 560, then made a little, so this looks like a perfect little cup and handle chart. We broke out to the upside above 560, and we make the exact same pattern, obviously in a smaller range. So we're only talking about here a 26 Rand range and in slightly shorter time period, but the chart, the pattern looks exactly the same. So, obviously we're probably going to expect this thing to play out some sort of somewhat similarly. So, bottom line is, when we called on the target here, when we broke out, it was from 480 to 520. We called the target at 560, went exactly to 560. We pulled right back to test support. Once we broke 560, we next called the target to 600 because of that 40 Rand range. Guess what? We just traded at 600 yesterday, but we didn't make it to 600 in this first little move. So we did get to the target on the breakout of this range, but on the breakout of the range here between 560 and 586 really is going to give us about a 26 Rand higher target than that, which obviously takes us well above 600, and I wouldn't be surprised to see that, especially on some sort of consolidation and a continued hold above 586. All right, moving on. Anglo Gold yesterday, we talked about this one 2 days ago, and it literally bounced exactly off the 586 level, as you can see there, day before yesterday. Yesterday, it was trading reasonably well. Gold price started to puke with the rest of the commodities space as the U.S. opened. And you can see there we dropped that 186 level, which is really the only real support here in Anglo Gold. I think we can see a significantly lower target. Obviously, we closed equivalent of about 179.50 in the States. Along with all the other golds that sold off incredibly hard, I would expect this thing to trade down significantly, and I wouldn't be surprised to see a reasonably quick retest of the breakout point here at about 164 bucks, somewhere in that range. All right. Imperial finally got above 170 again. We temporarily got above it back in the very beginning of March, failed it quite quickly, and have kind of been hovering around the upside, the higher end of this of the range that we were in between 160 and 170. Like I said, we finally got above 170. What I'd be looking for is for us to just pop above 173 here, which is really where the highs were of the past 2 months. And Imperial, I think if we can get above 173, I can definitely see us, retracing to the breakdown point, which is all the way up here around 188. So I do think this one's one worth watching. It's lagged incredibly hard. Remember, this one is one of the most rand sensitive stocks. So as the rand rallies, you can see this stock probably rally with it. So watch this one closely. I think we get above 173. I wouldn't be surprised to see this thing continue. And then the last one I'm going to show is ShopRite. And I was just going through some of the retail charts, and so many of them are broken out. Like we just mentioned earlier, it's incredible how the market, is so confident that she's not going to do that. That the central bank isn't going to do anything here today. But they're rallying sort of into this announcement today, and this one also starting to catch a bit of a move to the upside. And we've definitely popped up out of where we kind of struggled to get above about 151-ish. The next level definitely at 158, and I don't know if you guys can remember, but this was a huge level that we dropped out below, that we talked about this for ages. I definitely think that, provided market, conditions allow it, and the central bank, the SARB doesn't raise rates today, we'll probably look to see a retest of that 158 level in ShopRite sooner rather than later. And that's it for today, guys. Thanks a lot.